Good day, everyone. Welcome to another video lecture for Intermediate Accounting 2. I am your instructor, Ms. Joselme Salarinos Del Monte. So in this video, we are going to continue the discussion on the bonds payable. So bond retirement on maturity date. Now when you say retirement of bonds, it is when we extinguish the bond liability, meaning to say this is where we are going to pay our obligation at some future date. And usually we pay the obligation, both the principal and interest, on maturity date. When you say maturity date, that is the maturity period, the period or the date wherein the final settlement of bonds payable will happen. Now, to make a bond issue more attractive, the entity may agree in the bond indenture to establish a sinking fund exclusively for use in retiring the bonds at maturity. So when you say sinking fund, this is a type of fund set aside for purposes solely or for sole purposes of retiring the bonds at maturity. Meaning to say, this fund is established for the entity to be able to settle the said bonds when it becomes mature. So the entity prepares for this fund para inag-abot sa panahon na sila'y pang bayad. Now, the periodic cash deposits plus the interest earned on sinking fund securities should cause the fund to approximately equal the amount of bond issued on maturity date. So, sinking fund also is a type of an investment wherein you invest today and in the future there will be other returns or income that will be generated out of that fund. So, tanang gi-establish nimo nga deposit in making the fund plus the interest earned on that fund, kailangan it will be sufficient to cover or to equal the amount of bond issued on maturity date. When the bonds approach maturity date, the trustee sells the securities and uses the sinking fund cash to pay the bondholders. Any excess cash is returned to the issuing entity. Now, to illustrate the retirement of bonds on maturity date, now the entity sold bonds with face amount of 5 million on March 1, 2020 with 12% interest payable on March 1 and September 1, and the bond matures on March 1, 2025. That is after 5 years. So on March 1, 2025, at the date of maturity, the journal entry to retire the bonds together with the payment of the last semi-interest or semi-annual interest out of a sinking fund is debit bonds payable equal to the face amount 5 million, debit the interest expense, the last 6 months interest niya 300,000, and credit sinking funds at 5,300,000. Now, in such a case that there was no sinking fund established from the very beginning, of course, the payment will become from the general cash. So, instead nga credit nato is sinking funds, since we don't have any sinking funds on this situation, so we will credit to cash at 5,300. So, that is as simple as that. That is how we record the retirement of the bonds on maturity date. So there's no any complication when the bonds were matured or are matured on this maturity date. Now, the accounting problem will arise when the bond is retired prior to its maturity date. So meaning, wala pa nag-mature, wala pa naabot ang final settlement, gi-retire na siya, nagbayad na ka. So meaning, the bonds are still pre-matured. So the procedures for retiring pre-matured bonds are as follows. So since this is a procedure, so this is a step-by-step process, so kailangan i-follow na to siya. Okay, so first step is the bond premium or bond discount should be amortized up to the date of retirement. In short, you need to update the amortization of your bond premium or bond discount. So again, we need to update. Dapat updated ato ang amortization of premium or discount until the date of retirement. Okay? Usually, we will amortize or we will record the amortization of either premium or discount every year end. So that is usually December 31 of the current year. Now, assuming that the following year, in the middle of the next year, gi-retire ni mo prematurely ang bond. So meaning, first is you need to update the amortization of your premium or discount. So, kanasama ka mag-start sa amortization. Of course, that is from the last day, from your last amortization until the end or until the date of retirement. So, since ang last mong amortization is December 31 of last year, so mag-start ka og update from January 1 until the date of the retirement. So, inana siya pag-update sa amortization. Now, the balance of the bond premium or discount should be determined. So, if na amortization, of course, there will be balance of the premium. Okay? On the date of retirement, prior to the maturity date, surely there is still a balance of the bond premium or bond discount. Nga naman, kay wala pa man naabot ang maturity date. Okay? Since wala pa naabot ang maturity date, for sure there is still a balance of the bond premium or discount. Okay? Nga naman, kaya kanang bond premium or discount, imugyo na siyang i-amortize until it becomes zero on the date of maturity. Pagka-date sa maturity pa na siya mag-zero balance. Okay? Pero since prematured pa man siya, wala pa siya nag-mature, so of course, there is still a balance in that premium or discount. This balance is important because the amount related to the bonds retired is cancelled. It is very important for us to determine the balance of the premium or discount, for it is also be used in getting the carrying amount of the bonds retired. Okay? So, ang pangitaon na to ani, using the balance of the bond premium or discount is the carrying amount of the bonds retired. Ay, ang carrying amount sa bonds retired, that is face amount less the balance of the bond discount or add the balance of the bond premium. Next, step 3, the accrued interest to date of retirement should be determined. So, kanas amang ka or kanas mag-start ang imuhang accrual of interest. Okay? That will start from the last interest payment until the date of retirement. Okay? So, mo na imuhang i-accrue. Gikan sa last interest payment hangtod sa date of retirement. That is the amount of interest to be accrued. Next, total cash payment should be computed. So, the total cash payment is equal to the retirement price plus accrued interest. Okay? So, in the step 3, we determine the accrued interest because it will be included in determining the total cash payment. So, total cash payment includes the retirement price. The retirement price will be a certain percentage of the face value, like say for example the quoted price. Okay, kung ang retirement price is the same with the quoted price, kato ganing 97 or 97%, 105 or 105%, mo na siya ang retirement price. Next step, the carrying amount of the bonds retired is determined. Again, to determine the amount of bonds retired or the carrying amount of the bonds retired, we need to consider the balance of the bond premium or discount. Okay, so that is step number 5. Step number 6, there will be gain or loss on retirement of bonds to be computed. Okay, there is said to be a gain when the retirement price is less than the carrying amount of the bonds. On the other hand, loss siya or retirement loss siya if the retirement price is more than the carrying amount. Again, the gain or loss is the difference between the retirement price and the carrying amount. Loss siya if mas dako ang retirement price compared sa carrying amount. Now, why is it loss if mas dako ang retirement price kaysa sa carrying amount? Retirement price represents will represent the amount to be paid by the issuing entity to the investor. Okay? Mo na iyang ibayad. Okay? In exchange of the investment. Kay ang mahitabuan ni class, ting uli naman sa investment. Okay? So, si issuing entity, ang tag-iya sa bond, iyahang ibayad karon with the retirement price. Now, if the retirement price or the amount paid by the issuing entity to the investor is more than or higher than the actual amount or the carrying amount of his or her liability, then of course, loss yun siya. Kaya diba, kung ang imuhang utang lang is 100, pero ang imuhang gibayad or the retirement price is 150. So, lugi ka. Okay? So, there is a loss. Mas dako imong gibayad kontra sa imuhag yung liability. On the other hand, if mas gamay imong gibayad kumpara sa imuhang actual liability, then there is gain. Okay? So, mo na siya. So, we need to recognize the gain or loss. Take note ha, the amount to be compared with the carrying amount in getting the gain or loss will be the retirement price. Meaning, dili nimo i-appeal ang accrued interest. Accrued interest will be included in the total cash payment, but not in the determination of the gain or loss. Only the retirement price will be compared to the carrying amount of the bonds in getting the gain or loss. Step number 7, the retirement of the bonds is then recorded by canceling the bond liability together with the unamortized premium or discount. Any accrued interest is debited to interest expense. Okay, so that is how we record or to make journal entries on the retirement of the bonds. Okay, so timanan na to, no? First step is to update the amortization of the bond premium or discount. Then after updating, we need to determine how much is the balance of your unamortized bond premium or discount. And after getting the unamortized bond premium or discount, determine the accrued interest, for it will be used in determining the total cash payment. Total cash payment includes the retirement price plus the accrued interest. Now, after getting the total cash payment, determine the carrying amount of the bonds retired. So, in getting the carrying amount of the bonds retired, face amount less the balance of the discount on bonds payable or plus the balance of the premium on bonds payable. Now, the carrying amount and the retirement price will then be compared to get the either gain or loss on retirement. There is said to be a gain if the retirement price is less than the carrying amount, then loss if the retirement price is more than the carrying amount. Then, all such items determined will be recorded, okay, in a journal entry. Okay, so now let's have the illustration. On March 1, 2020, bonds with face amount of 5 million are issued for 4,730,000. So meaning, on that date, the bonds were issued at discount because the issue price is less than the face amount. So how much is the discount here? We have 270,000. 5 million minus 4,730,000. We have 270,000. Now, the bonds are dated March 1, 2020, meaning the bonds were issued on interest date. Okay, nitunong siya sa interest date. And mature in 5 years and pay 12% interest semi-annually on March 1, 20, or March 1 and September 1. Kano sama siya dapat mag-mature? That is on March 1, 2025, after 5 years. The straight line method of amortization is used for simplicity. So, all of the bonds are retired on July 1, 2023. That is, after 3 years. Okay? Diba? Tama, no? March 1, 2020 to July 1, 2023. That is 3 years. Ang age sa bonds is 3 years and March, April, May, June. Okay. 3 years and 4 months. Okay. The age of the bonds is 3 years and 4 months on the date of retirement. So, wala pa gyud siya naabot og 5 years. Meaning, prematured pa gyud ang bonds. And it was retired at 97. So, the retirement price is 97. Okay, so first step, update the amortization. So in this case, on July 1, 2023, the date of retirement, the last amortization happened on December 31, 2022. Okay, that is the year end. Year end of the previous year, 2022. So, ang wala na lang na amortize as of the date of retirement is from January 1 to July 1 of the same year, and that is 6 months. Okay? Pila di ay ang amortization. So, ang amortization is, ang annual amortization is 270,000 divided by 5 years. So, we have 54,000 annual amortization. For 1 year, 54,000. But since 6 months lang man, ang kailangan nato i-update. So, i-divide na lang nato by 2. So, ang updated nato nga amortization as of the retirement date is 27,000. So, entry, debit, interest expense, 27,000. And credit, discount on bonds payable, 27,000. Second step will be the determination of the balance of the bond discount or premium. And in this case, we have the discount on bonds payable. So, pila naman ang balance sa discount on bonds payable nato? Okay. So, balance on the discount of bonds payable will be, the beginning is 270,000. I-less lang nato ang na-accumulate na amortization gikan sa date of issuance of the bonds until the date of retirement. So, from March 1 to July 31, July 1, 2023, that is 3 years. As I've said earlier, that is 3 years and 4 months, equivalent to 40 months. Okay? So, 40 months na siya ang iyahang amortization. So, I think the monthly amortization is 4,500. Okay? 4,500 kay kaganiha. Ang iyang annual amortization is 54,000. So, 54,000 divide 12. The monthly amortization is 4,500. And since 40 months na ang naglapse, so times 40, the amount of accumulated amortization is 180,000. So, out of 270,000, 180,000 na ang na-amortize, ana. So, meaning, the balance or the unamortized discount on bonds payable on the date of retirement is 90,000. So, 90,000. So, we will take note of this one. 90,000 ang balance sa atuang discount on bonds payable. Step 3 is to determine the accrued interest. There is an accrued interest when the retirement date does not coincide with the interest date. Okay? Ang interest date nato is every March 1 and September 1. The retirement happens on July 1. So, natay accrued interest, ana. So, asa man or pila man natong accrued interest? The accrued interest will cover the last interest date until the retirement date. Okay, so ang last interest date is March 1 hangtod sa retirement. So we have March, April, May, June. Okay, 4 months. So 4 months ato ang i-accrue. So that is 5 million times 12% times 4 over 12. So the accrued interest is 200,000. Okay? So this one, what will happen to this? This will be added later on to the retirement price in getting the total cash payment. So total cash payment, that is retirement price nga 5 million times 97 because again, on the retirement date, the bonds were retired at 97 or 97% of the face amount. So equivalent to 4,850,000 plus accrued interest nga 200,000. So total cash payment is 5,050,000. Okay, so this is the total cash payment. Next is carrying amount of the bonds. So the carrying amount of the bonds is computed as face amount of the bonds 5 million less the balance of the discount on bonds payable 90,000. So therefore the carrying amount on the retirement date is 4,910,000. Then last but not the least, Determine the gain or loss on retirement. So again, the gain or loss on retirement is the difference between the retirement price and the carrying amount of the bonds retired. So the carrying amount is 4,910,000 and the retirement price is 4,850,000. Therefore, the difference is 60,000. And since the carrying amount is more than the retirement price, therefore this difference is considered as gain on early retirement or extinguishment, or gain on early retirement of the bonds, 60,000. So after this, all of the figures determine ato siyang i-record. So ang recording will be debit. Okay, i-close na to ang bonds or the bond payable account and its related account, which is the discount on bonds payable. So debit bonds payable 5 million and the amount of accrued interest will be debited to interest expense 200,000. And credit cash equal to the total cash payment, 5,050,000, and close the discount on bonds payable by crediting it into 90,000, and credit the gain on early retirement of bonds, 60,000. Now, the gain on early retirement of bonds, 60,000, will be presented as a component of the finance cost or other income in the income statement. Okay, so appear siya sa income statement. Okay, so that is the process of retiring bonds prior to its maturity date. Again, let's recall the steps in accounting the bonds retired prior to its maturity are first we have update first the amortization of either bond premium or discount. Second, determine any balances of the bond premium or discount at the date of retirement. After which, compute the accrued interest. The accrued interest that will be accounted will cover from the last interest date until the date of retirement. Fourth one, determine the total cash payment. The total cash payment includes the retirement price plus the accrued interest. Fifth, determine the carrying amount of the bonds retired. So the carrying amount will be face amount plus the balance of the premium or minus the balance of the discount on bonds payable. Next, step 6, determine the gain or loss on early retirement. Gain or loss on early retirement is the difference between the retirement price and the carrying amount of the bonds retired. There is a gain if the retirement price is less than the carrying amount of the bonds, while there is a loss when the retirement price is more than the carrying amount of the bonds retired. Then, last but not the least, we need to make journal entries. So here, class, what if the retirement on the date of or the bonds that are retired on the date of retirement are not or is not the full amount or the full bond outstanding, instead only portion lang sa face amount ang gi-retire. Okay, so ano lang siya kanang tawag ani 1 million over the 5 million nga total face amount. Okay, so the same procedures will be followed. So ang amortization is the same, 27,000. So i-update na to tanan. Okay, even though that the retirement is only 1/5 lang, pero kailangan na to i-update gahapon ang amortization of the full 5 million nga face amount. So still atong amortization will be 27,000. Okay? So entry debit interest expense 27,000 and credit discount on bonds payable 27,000. On July 1, 2023, after recording the discount amortization, the discount on bonds will have an adjusted balance of 90,000. Okay, 90,000 na lang siya. To determine the total cash payment, so retirement price plus the accrued interest, ang accrued interest will just be equivalent lang po sa gi-retire, and that is 1 million. Okay? So 1 million times 12% times 4 over 12. So we have 40,000 plus the retirement price nga 970,000. So total cash payment is 1,010,000. Next is the carrying amount of the bonds. So that will be bonds payable retired 1 million less the discount on the bonds payable applicable to the bonds retired. So ang total nga bond discount nga nabilin is 90,000 after the updating of the amortization. But since kaning 90,000 is good for the 5 million na bonds, kwaon lang nato tong para sa 1 million. So that is 1/5 lang siya. So 90,000 times 1/5, we have 18,000. So this 18,000 is the discount on bonds payable related to the bond retired. So carrying amount of the bond retired alone is 982,000. Less the retirement price, 970,000. So we have a gain on early retirement of bonds. We have for 12,000. Okay? So entry to record, debit, bonds payable, 1 million. Debit interest expense for the accrued interest, 40,000. Cash, 1,010,000. Credit, discount on bonds payable, 18,000. And credit, gain on early retirement of bonds for 12,000. Okay. Subsequent to the retirement, ang nabilin nga bonds karon from 5 million, nahimo na lang siyang 4 million. And at the same time, the discount on bonds payable from 90,000, nahimo na lang siyang 90 minus 18. Kaya ang 18,000, mamanto ang related sa retire. So, 72,000 na lang ang discount on bonds payable. So, 4 million minus 72. The carrying amount of the bond outstanding, katong nabilin, is 3,928,000. Then, after that, padayon lang gihapon ta sa atong amortization. Okay? For September 1, interest payment for the remaining bonds, 4 million times 12% times 1/2, we have 240,000. And on December 31, we have adjustment, interest expense, debit, and credit accrued interest payable, 160,000. So, ang gi-accrue na to is from September 1 to December 31. That is 4 months. And amortization of discount. We are done with the first 6 months nga amortization that was made during the retirement date. So, ang ato na lang i-amortize karon December 31 is kato na lang nabilin for the rest of the year 2023. So, ang nabilin na lang is 6 months. Okay? So, giyon sa man nato na pagkuha ng 6 months. Pila ganito ang iyahang monthly amortization? 4,500, no? Times 6, 72,000 man to, no? 72,000 ang nabilin sa iyahang discount amortization. And then, the remaining months is 20 years. Divide 20 years. 20 months, I mean. So, ang nabilin nga monthly amortization is 3,600 times 6 months. So, we have 21,600. Why 20 months? Since 40 months na ang kuan from the up to the date of the retirement, ang age na sa bonds is 40 months. So, meaning, 40 months na siya na amortize. So, ang nabilin na lang kay 20 months. Since 5 years man, and 5 years is equivalent to 60 years, 60 months I mean, 60 months minus 40 months, that is equal to 20 months. So, katong 72,000 nga nabilin nga unamortized discount, i-divide na to siya by 20 months. So, the monthly amortization is 36. And since 6 months man na itong i-amortize times 6 months, so we have 26,100. Okay. So, next is Treasury Bonds. So, Treasury Bonds are the entity's own bonds originally issued and reacquired but not canceled. The same nature with the Treasury shares. Treasury shares are issued shares but reacquired or but are subsequently reacquired by the issuing entity, but these shares are not canceled. Okay? The acquisition of Treasury bonds calls for the same accounting procedures accorded to a formal retirement of bonds prior to the maturity date. Meaning, ang accounting nato sa Treasury bonds, acquisition of own bonds will be the same as the retirement of the bonds prior to the maturity date. So, meaning, the Treasury bond should be debited at face amount and any related unamortized premium or discount should be canceled. Any accrued interest paid is charged to interest expense. Now, take note that when there is a Treasury bonds, wala nato gyud gi-cancel or there is no cancellation of bonds. Okay? Meaning, instead nga magdebita og bonds, kay diba supposed to be parehas yung accounting sa retirement, no? So, instead nga magdebita og bonds payable, we will just debit a separate account and that is Treasury bonds equal to the face amount. Okay, take note, Treasury bonds, though it is acquired, okay, reacquired, but it is not canceled. So, dili na to tanggalon ang bonds payable because these Treasury bonds might be sold subsequently. Pwede na siya ibaligya subsequently. Now, the difference between the acquisition costs or the what we call kung sa sa retirement pa, we call it as retirement price, and the carrying amount of the Treasury bonds is treated as gain or loss on acquisition of Treasury bonds and therefore reported in the profit or loss. So, say for example, an entity originally issued bonds with face amount of 5 million at 105 or a premium of 250,000. Subsequently, the entity reacquired 1 million face amount to be placed in the treasury at 103. At the time of the reacquisition, the amortized or the unamortized premium balance is 200,000 and the accrued interest on the treasury bonds is 30,000, which is paid in cash. So, to record acquisition of the treasury bonds entry, debit treasury bonds at face amount. So, we only reacquired 1 million. So, 1 million lang po dato ang i-debit. Okay. Next is the related account, which is the premium. Okay, i-cancel daw to siya. But take note, ang i-cancel lang po nato is prorated lang po sa amount nga gi-reacquire. So, the unamortized premium balance is 200. The 200,000 is good for the 5 million nga total face amount. But take note, we only retired or reacquired 1 million and that is equivalent to 20% or 1/5. Therefore, ang ato lang pong i-cancel nga premium is 1/5 lang po sa 200,000. So, entry, debit, premium on bonds payable and bonds payable 40,000. And the related accrued interest on treasury bond is 30,000. So, i-debit na to siya. Interest expense 30,000. Credit cash equivalent to the acquisition price. The acquisition price is 103. That is 103% of the face amount 1 million. That is 1,030,000 plus the accrued interest nga 30,000. So all in all, we have 1,060,000. Now, gain or loss on acquisition of treasury will be determined by the difference between the acquisition cost and the carrying amount. The acquisition cost is 1,030,000 versus the carrying amount of the treasury bonds, we have 1 million plus 40,000. So we have 1,040,000. So 1,030,000 acquisition cost versus the carrying amount of the treasury bonds, 1,040,000. The difference is 10,000. Since the acquisition cost is less than the carrying amount of the treasury bonds, therefore the 10,000 is a gain on acquisition of treasury bonds. So this is how we get those figures. Okay. Now subsequently, 'di ba ang treasury bonds, though it was reacquired but not canceled, pwede siya ma-reissue in the future. So pwede siya i-reissue at a premium or at a discount. Okay? So, of course, ang determination nato sa premium or discount will be the same if the face amount is higher than the reissuance, then there is discount. On the other hand, if the reissuance is higher than the treasury bonds or the face amount, then there is premium. So, say for example, if the treasury bonds are reissued for 1.2 million, then, of course, you have premium on bonds payable nga 200,000. So, entry, debit cash, 1.2 million, credit, treasury bonds, 1 million, and credit premium on bonds payable at 200,000. On the other hand, if there is reissuance of discount or at a discount, for example, it was issued for 900,000, then there is a discount of 100,000. So, entry, debit cash, 900,000, and credit, discount on bonds payable, 100,000, and credit, treasury bonds at 1 million. Now, the premium or discount on the reissue of the treasury bonds should be amortized over the remaining life of the treasury bonds. Take note of that. There's still a premium or discount, so kailangan gapo nato siya i-amortize. But at this point, i-amortize nato siya over the remaining life or remaining life of the maturity of the treasury bonds. Now, the treasury bonds, when subsequently or when not subsequently sold, meaning gi-retire na lang siya or gi-cancel, so simply, ato lang i-cancel ang related bonds payable and at the same time, the treasury bonds. So, pag once i-cancel na ang treasury bonds, tanggalon na nato ang bonds payable. So, we will debit bonds payable, 1 million, and credit treasury bonds, 1 million. So, statement presentation. To present the treasury bond, it will be reported as a deduction of the bonds payable. Okay, again, treasury bonds will be deducted or will be presented as a deduction from the bonds payable. Okay, to get the bonds payable issued and outstanding. So that's the end of the second part of our discussion for bonds payable. There are still topics under bonds payable that we are going to discuss. So, you just wait for another video lecture in relation or in relation to the continuation of this topic so that mahuman nato ang bonds payable na topic. And after the bonds payable, then we will have the another topic also. So for more information or for more references, you may refer to these sources, other sources class. Okay? So I hope that you will rewatch again the video for you to be able to master the basic concepts of accounting for the bonds payable. So thank you so much for watching. Have a good day. Bye.